Kei kone and Nicholas Poynton, mena kaupapa kai Pakahi. Nicholas is here to talk all things business. So, RBNZ, what's going on with their tune over monetary policy?
Yeah, well, look, the economists, industry observers, banking industry, we've all been waiting for this moment, how the RBNZ is going to be reacting to some of these more recent inflationary pressures we've been seeing in the economy. The question really was, is the RBNZ going to maintain its view that these pressures are transitory, or is it going to change its tune and maybe signal a shift in its policy direction? And what we got today in its latest announcement was more of a nod to the latter. In its latest review of policy settings, it says it's going to hold the official cash rate at current levels. That funding for lending program, which is essentially cheap loans for banks to then go on lend to consumers and businesses, that's been left unchanged. But the key difference here is that its big bond buying program, which is essentially money printing, that's come to a halt. And that's led many economists to now price in an interest rate hike next month. That's because this move is seen as a necessary precursor. And we spoke to ASB's chief economist, Nick Tuffley, not too long ago. And as you'll hear, he says this announcement wasn't necessarily what the market was expecting.
Yeah, we were a little bit surprised by how explicit the Reserve Bank was that the need to reduce stimulus is basically here now. We'd certainly expected the Reserve Bank to be changing its tone. What it's done is given a fairly clear signal that, barring some surprises, it's likely to lift interest rates at the next meeting in August.
So that was ASB's chief economist, Nick Tuffley, who goes on to say that the tipping point for the RBNZ has really been sort of these changes in the shape of the economy since their last statement back in May. You know, our economy, it's grown by 1.6% in the first quarter. Nobody was expecting that. Some of these labour capacity constraints, which we've become all too familiar with, that's creating real inflationary pressures for businesses, as have those supply chain disruptions. And the RBNZ, it has maintained that inflation. Remember, it does have a target of about 2%.
Yeah, in the middle.
Expects a spike of about 2.6% in the near term, but it maintained that this was likely to dissipate over the medium term. However, they say today's move was necessary to ensure that it meets those policy targets that it has in the medium term. And the impact that this is going to have some sort of impacts for consumers. First of all, is that term deposit holders, those few who've decided to leave their markets in term deposits, they're going to see slightly more money in terms of their returns, and new borrowers are going to see the price of debt actually increase. And ASB Bank today, they were really quick to move on this. They sort of preempted today's announcement. They have they've broken ranks from the other major banks. They've raised its fixed mortgage rate by between 30 to 36 basis points, notably including 1 to 2 year fixed rates, and those are incredibly popular amongst home buyers. And it's also raised deposit rates by about 15 basis points. Now, other banks are expected to follow suit, but you can probably expect that people who were taking out huge mortgages over the past year, really over-leveraged themselves, we're probably likely to see less of that because the cost of servicing that mortgage is likely to increase. Next piece of info from the RBNZ is out on Friday, and that is the latest read on consumer price inflation numbers.
And what news do you bring from the markets?
Well, the markets reacted negatively to the likelihood that interest rates will come sooner rather than later, down 65 points to 12,720, while the dollar, it got a shot in the arm from today's announcement, up by as much as 1% to about 70 US cents and up to 94 Australian.
Okay, thanks, Nicholas. Nicholas Poynton with Business News there.